webinar. Hope all's well. Happy Wednesday, and it's absolutely amazing here. The weather. Citizens Financial, we are a mortgage company here based in Vacaville, California. We have an office in Fairfield next door, and we have an amazing office in Long Beach, California as the Bell Group. The Bell Group in Long Beach, California is doing an amazing job serving the Southern California region. We also have loan officers throughout Los Angeles and San Bernardino County that work remote. So we have officers throughout the state that can serve you in your community, provide you exceptional service. I'm talking about service. That's one of our mantras here at Citizens Financial. We are the badges broker. We are going on our 17th year of working with officers, first responders, members of use armed service on site, showing up and educating them and being a kind of value-added partner. We're given the name Badges Broker by 2007, and we've been honored to be called that since. Our mantra is proudest to those who serve and keep our community safe by providing exceptional home financing. Hence why we have the Badges Broker Program, our DPA. Okay, it is available in all 58 California counties. We do not have any exemptions. It's not available in this county or that county. We say from Eureka to El Centro, we have you in a home with our DPA program. From coast to coast, border to border, California is open for business with our DPA. It is completely forgivable. It was, up until about 30 days ago, a forgivable grant after 6 payments, which we all know takes 7 months. They revised that. It is now forgiven at closing. 3.5%, which is 100% down payment for an FHA-based mortgage, is forgiven at closing. You can combine this program with seller-paid closing cost concessions up to 6%. That can be paid for by the seller or the new home builder. You can pay for by the realtor. It's amazing. You can get assistance from all 3 avenues. Pay for 100% of your closing costs, and there's no resale restrictions. Okay, eligibility. Let's bring on pay a little attention. To be eligible for the program, the borrower must meet only one of the 4 following categories. First-time home buyer. Okay, that's about 95% of every single person that will be qualified for the home product. If you're a first-time home buyer, which the guideline says you have not owned a home or had ownership interest in a home in the last 3 years, that is a nationwide Fannie Mae, Freddie Mac guideline. HUD follows it. VA, FHA follows it as under HUD. It's a guideline. Now, current retired employment or volunteer non-paid member. It's pretty interesting. So there's certain industries we'll talk about later. You don't even have to be a gainfully employed person, but if you're volunteering for certain industries, you qualify. How amazing is that? Income. This is the Achilles heel to a lot of the DPA programs. Well, there's income restrictions for my county, the AMI, which stands for the Area Median Index. My income, maybe mine and my significant others, husband and wife, our combined income is over the maximum allowable amount for the county, but we have to be over that maximum allowable amount for the county to qualify. That's a California conundrum. You got to make money to afford a house, but you make too much money, you're out of the programs. We have eliminated that. Our program has no income limits. Does not matter how much you make. If you're trying to buy a new house, we're here to help. Underserved census tracts, that is the category which by the time we get to that point, majority of everyone doesn't even have to get to the point where we look and find out where you live, where you're coming from, where you're buying your house, what percentage of that demographics is a minority group. Is that minority group represent more than 30% of the general area? 95% of people are just first-time home buyers, and they work in certain professions, which we'll talk about in a quick second. All right. Another category, any borrower on the loan applicant is a first-time home buyer who meets the following criteria. Is purchasing the subject property. You have to be purchasing property with intent to occupy. Major thing. You cannot buy it. Well, I'm buying this my first home, but I'm actually going to be renting it out, or I'm buying it 300 miles away from where I work. It doesn't really work out that way. You need to show intent to occupy as your subject property. You also need to make sure that you have no ownership interest solely or jointly in a residential property during the 3-year period that precedes the date of the application. That's the thing I was alluding to before. Well, let's say that you owned a house a year ago and you sold it. You have a buco cash because you sold at a profit, but you try to utilize this program, use other people's money. Smart, but they won't allow it unless you qualify with a certain type of job. They will. Let's hop on to the next one. Okay, here it is. Here's what we call the Badge Broker Program. Current retired employment or volunteer non-paid member. If you are in the military, you automatically qualify for our program. If you're a first-time home buyer, if you're a first responder, police officer, firefighter, public safety officer, paramedic, EMT, or any similar type of first responder, you qualify. If you're an educator at a school, a Sunday school, a tutor, daycare provider, you qualify. Medical profession, we all know about the doctors program they've had. It was last 10, 12 years. Doctors had an amazing program, but it wasn't open for everybody else. Our program for medical professionals is open for anyone. You can be an x-ray tech, an admin, you can be a janitor that works at a facility and qualify. Civil servant, you can be working at a United States Air Force base, military base, work at a county building, a city building, that you are not an officer or not a firefighter, but you are a civil servant. You work for the city of XYZ, city of LA, city of Santa Monica, city of Vacaville, and you qualify. That is the huge thing. Okay, bar eligibility. We just covered that. I just want to give you kind of flow chart to this in the previous slide. Here's an example of how our program works. Typical house. Now, this is the Goldilocks story. If everything fell in line, this is what you would get. A DPA purchase utilizing FHA financing and closing cost credits. House, $600,000. 3.5% of that is $21,000. Typically, you want to have 100% of the DPA covered. That money is forgiven at closing. The real magic comes in to where we work with your agent or your home builder that you are going into. We want to make sure that when you get pre-approved, we find out what you're going to afford. We will do initial review of the estimated closing costs for the subject property that you're pre-approved for. Let's say the estimated closing costs are $25,106.30. That is based on the title fees, escrow fees, the lender fees, all of the fees, the one-time close, taxes, insurance, the whole kit caboodle is $25,000 and change. We want to make a presentation to your new home builder or your existing home builder seller to do a seller paid closing cost credit or a builder credit to cover the closing costs. If it works out, you can get 100% of your closing costs covered. You can get your down payment covered by our program, 100% of the closing costs covered by the seller, home builder, or a combination. You will roll into the house with zero money out of pocket. Now, I say zero money, but you will always have to pay for an appraisal. And I recommend, more of I beg you, to get a home inspection. Average home inspection is about $350 to $800, depending on where you are in California. It's worth its weight in gold because you want to make sure your house is set up and ready to go. That said, maybe $1,500 out of pocket, you can acquire the house with no money out of pocket for yourself besides that. Okay, programs. This is FHA based only, but it's not a bad thing. You get traditional FHA. We also do the 203K program, the limited and the standard. So what does that mean? Let's say there's a house in the neighborhood and you've passed by because you'd love to live there, but you couldn't just imagine spending the down payment, closing costs, and then having to fix that property up yourself in this market with inflation through the roof. This program is for you. This allows you to find that house, go to it with a handyman, a contractor, submit a bid with a purchase contract, turn it in. You get 100% of the repairs paid through the 203K loan. It's absolutely amazing. Okay, parameters. We're at a 580 minimum FICO score to qualify, approved eligible. 620 will allow you to go refer eligible. Basically, at 580 above, you're good to go. There'll be a manual overwrite when you have to get manual underwriting review. Underwriting method score, total scorecard, that's more kind of tech talk, but 580 FICO score is what we need. Okay, parameters. It's 30-year fix, essentially 1 to 2 units. That's a very wonderful caveat. So you can buy your first property to be a 2-unit. And yes, if you have a 2-unit, you can have an intent to occupy 1 unit and rent out 1 other unit from day 1 can be rental property. So you can be in that business of having cash flow, rental income, and your first home buyer property if you buy a 2-unit with us. Everything else is pretty typical, 300% down. Your back-end ratios, DTI, access for debt to income ratio, 49.99. It might actually be, for safety, we should probably say about 48%. It's approved eligible, and that's about it. Okay, probably types again. Okay, we're done. A little over the time limit, but hope all is well. Please get a hold of us. We have an amazing team here at Citizens Financial. Love to contact you in private presentation and go over stuff in more detail. Hope you have a wonderful day.